Welcome to the deep dive. We take the sources you send us, dig in, and pull out the key insights so you can get informed fast.
Ah,
So today we're tackling consistent profitability in trading. We've got a transcript here from a YouTube video by stock learners.
yeah, and what's interesting about this one, I think, is the source. It's someone who's, what, 2.5, maybe 3 years into trading?
Right.
So they've kind of been through the ringer,
Yeah.
struggled initially, didn't find consistency.
Yeah.
It feels grounded.
Exactly. And they really zeroed in on this one big question based on their own journey, but also watching others.
Basically.
What's the main mistake stopping traders from being consistently profitable? And, crucially, how do you actually fix it?
Okay.
And we should probably say this isn't really for absolute beginners still figuring out, like, what a candlestick chart is.
Right. It's more for folks who get the basics of technical analysis, but are still thinking, why aren't I making consistent money?
Precisely. So you've got the fundamentals down, but the results are not quite there yet.
So where did this trader start? What
Yeah.
was the big aha moment for them?
Okay, so picture this. They're struggling, results are up and down, they start journaling, like really digging into their trades, especially the mistakes.
Okay, good practice.
And what pops out isn't like loads of tiny errors. It's this recurring nightmare. 4 huge losing trades.
Just 4.
Just 4. But each one, on its own, completely wiped out all the profits they'd built up over like a decent stretch of time.
Ow. So months of effort just gone.
Gone. Poof. In just a handful of trades.
Yeah, it really hits home, doesn't it?
Mm.
It shows how those small wins, the ones that make you feel good day to day,
Yeah, they feel
they
great.
can just be completely canceled out, even overshadowed by a few really bad decisions or moments of letting a loss run.
It's like trying to fill a bucket with a massive hole in the bottom.
Exactly. And it's not just the P&L, right? It's the mental side. A huge loss like that can mess with your head.
Oh, definitely.
It changes how you approach the next trade, makes you hesitant, or maybe even reckless trying to win it back fast. Revenge trading.
Yeah, that's a killer. And this trader saw something else too, which connected the dots for them.
What was that?
They noticed all these newer traders, posting online, made profit today. Another green day.
Right. You see that a lot.
Looks great, sounds successful, but then they remembered the statistic that like 95% of traders losing money overall.
The harsh reality.
And hearing stories, maybe even from those same people later, about being down overall despite all those green days. It clicked with their own early experience.
Ah, okay. So the daily wins don't tell the whole story.
Not at all. It feels good that positive reinforcement makes you think you're doing okay.
But if you don't have a handle on the losses.
Exactly. It's like walking through a minefield, as the speaker kind of implies. You might get lucky for a bit, but one wrong step.
And that wrong step is the one big loss.
That's the term they use. Yeah, that single trade that just blows up your account, ruins weeks or months of hard work.
And like we said, it throws off your rhythm, your confidence, everything.
Total derailment, like a train crash for your trading journey.
Which leads us perfectly into this idea they introduced.
Yeah.
The digestible loss.
Right, because the argument is many traders who get the basics are actually profitable day to day. They can check winning trades.
So the problem isn't finding winners necessarily.
No, the real difference maker, the thing separating the consistently profitable from the rest, is how they handle the losers, specifically the size of those losers.
Keeping them digestible.
Exactly. A loss you can mentally and financially recover from pretty quickly. Doesn't leave a huge dent.
Doesn't scar you psychologically.
Right. And they use an analogy I like with chart patterns.
Oh, yeah.
You know how after a big candle, a huge price move, you often get a pullback, a retracement.
Sure, consolidation or profit taking.
Well, a massive trading loss does the same thing to your psychology. It's a huge shock, and you naturally pull back mentally. It knocks you off balance.
And they really stress that psychological recovery time. If a loss takes you, say, 7 to 10 trading days just to make the money back,
Yeah.
the speaker argues you probably never truly recover mentally from that.
Yeah.
The pressure builds. You might force trades. It's a bad cycle.
Creates a kind of desperation, maybe?
It do, yeah. A need to get back to even that leads to more mistakes.
And think about your account curve, like the graph of your equity over time.
Okay.
A healthy one isn't a straight line up. It should look more like stairs. Little steps up, maybe tiny dips back for the small losses.
But the overall trend is upwards.
Right. But one huge loss, that's a massive chunk taken out of the staircase. Suddenly the climb back looks incredibly steep, maybe impossible.
Very discouraging. So we get it. Big loss is bad. Digestible loss is good. But How do you define digestible? What's the practical advice?
Okay, so they gave a pretty straightforward rule of thumb. Your losses, ideally, shouldn't be bigger than your average winning trade.
Ah, okay. So connect your loss size to your typical profit size.
Exactly. So if you're usually making, say, 5,000 to 8,000 rupees when you win,
Assuming rupees based on the original mention.
then you really want to keep your losses below that, maybe cap them at 5,000 or 6,000 max.
That makes sense. It ensures one loser doesn't wipe out multiple winners. Keeps the math working in your favor over time. Risk management 101, really.
It is, but it's easy to forget, right? Especially when you start chasing. The speaker warned about that, trying to hit a massive 25K profit day when your normal is 5K.
Yeah, that home run mentality,
It often leads to taking way too much risk, bigger position sizes,
which naturally sets you up for those potential oversized losses if the trade goes wrong.
and that large red candle on your equity chart, that really bad day. The speaker points out it's not just the money lost then.
Is the recovery time.
Yeah, they reckon it can take like 10, maybe 15 trading days just to climb back from one unusually big drawdown.
That's weeks of trading just trying to get back to where you started. Huge waste of time and mental capital.
Exactly. But, and this is important, they also stress that losses are part of the game. You can't avoid them completely.
No, trying to avoid all losses is unrealistic and probably leads to missing good opportunities.
Right. Small controlled losses are actually okay. They're necessary even. They build resilience, you learn from them, and they keep you in the game without blowing up your account.
Okay, so if we accept small losses are fine, but big ones are the enemy, what were the actual strategies suggested to avoid the big ones?
First step, super important. Plan your exit before you enter. Decide your maximum acceptable loss for that specific trade up front.
Know your number before the emotions kick in. Set your stop-loss level based on your plan, not on hope.
Precisely. Whether it's a percentage or based on volatility like ATR or a chart level.
Have that number.
Okay, step one, pre-calculate the max loss.
Step two, actually stick to it. Build the habit, the discipline, to cut the trade when it hits that level. No hesitation, no second guessing.
That's often the hardest part, right? Pulling the trigger on a losing trade. It really is. But doing it consistently builds that mental muscle. It stops a small cut from bleeding out into a massive wound.
And there's a positive feedback loop there too, isn't there?
Yeah, the speaker mentioned that. When you take a small, controlled loss, and then maybe the next day you have a decent win.
You feel good. You see that you can recover quickly, that the system works, it boosts confidence.
Exactly. It stops you feeling like you're stuck in a hole you can't climb out of.
So pre-calculate loss, cut the loss.
Yeah.
What else? Did they talk about different trading styles related to this?
Yeah, they kind of outline two main approaches, both emphasizing loss control. First one is aiming for lots of consistent small wins.
Okay, high win rate, maybe smaller average wins.
Probably. You accept small losses will happen too, but hope the frequency of wins, maybe plus some occasional bigger wins, keeps you profitable overall. More conservative, maybe.
Steady accumulation, what's the second approach?
Second one is being okay with taking small losses more frequently, but the goal is to capture much bigger gains when you do win.
Ah, so focusing on a higher reward to risk ratio, letting winners run much further.
Exactly. You need conviction in your winners and the discipline to hold them, but still be ruthless about cutting the losers small and fast. Lower win rate, potentially, but bigger winning trades.
Different strokes for different folks, but the common thread is strict loss management.
Absolutely. And they mentioned one specific technique that can help, especially maybe blending those styles a bit.
Oh yeah, what's that?
Partial quantity exits. So say you take off like 30% of your position when the trade hits a 1.1 risk-reward ratio.
Lock in some profit, reduce your risk on the rest.
Right. It means you get more frequent small wins, or at least break-even trades on the first part, which feels good psychologically. But you still leave the rest of the position on, giving it a chance to turn into one of those bigger winners if the market keeps going your way.
That's smart. A way to balance consistency with capturing larger moves. Reduces the pressure a bit.
Definitely. But the underlying principle, no matter the technique, comes back to that recovery time.
Yeah, can you make back today's loss tomorrow or the day after?
That's the key. The speaker was really clear. Your loss on any single day should never be so big that it takes you like 5 days just to get back to even.
That's a recipe for disaster. Psychologically draining.
The ideal, they said, is the opposite. It should take maybe 5 losing days 5 small losing days to wipe out the profit from one good reading day.
Now, that sounds like a much healthier, more sustainable way to trade. Gives you a buffer.
Exactly. A huge safety net, not just for your account balance, but for your head.
Okay, so wrapping this up, if we distill this whole deep dive from the Stock Learner's transcript,
Yeah.
the core message isn't really about finding some magic indicator or hitting home runs every time.
No, not at all. It's much more fundamental. It's about rigorous, almost obsessive control over your losses, especially avoiding those huge, devastating ones.
Minimizing the losers is actually more important than maximizing the winners, in a way.
That seems to be the argument, yeah.
Okay.
Because those big losses just set you back too far. The digestible loss concept is key.
Keep the hits small enough that they don't knock you out of the ring, mentally or financially.
Right. Which brings us to the final thought we want to leave you with.
Okay.
Take a really honest look at your own trading. If you trade, think about your history. How have the big losses, we all have them, impacted your journey? Your bottom line, sure, but also your mindset, your confidence.
And then ask, what's one concrete thing you could start doing, like today, to make sure future losses stay small, stay digestible?
Maybe it's always setting a hard stop. Maybe it's reducing position size. Maybe it's just being more honest about when a trade isn't working.
Compare your average winning day to your biggest losing day. Is that ratio healthy, or is it skewed the wrong way?
That comparison alone could be really eye-opening.
Definitely. This has been about one crucial piece, loss control, but it obviously connects deeply to trading psychology, overall risk management, areas worth exploring further.
Absolutely. Managing yourself is often harder than managing the trades. Food for thought.